What up, guys? Good morning. It is Warsh time, baby. It's Warsh time. Get ready for the Task Force Warsh. Warshflation, Warsh trading. We got it all. We got it all. Speaking at 10 a.m., we're going to have Fed Chair Warsh. Kevin Warsh. We're going to start calling him Kevin. Speak at the Jackson Hole Economic Policy Symposium. This is held by the Federal Reserve Bank of Kansas City. It's an invitation only, but we will be live streaming it. We're invited. You're invited. Gathering of central bankers, economists, academics, policymakers, journalists, people watching on YouTube, you and me, I don't know, everybody else. They've been doing this since, I think, 1970? Something like that. We've been covering it year over year for the last 7 years, I do believe. The last 5. It is one of the most watched central banking events because Fed chairs have often used their keynote speeches, just like Warsh is doing today, to signal policy changes. This is the big run into September. I will say this is the reason we tend to see September be the pivot month. Oftentimes we'll see the Fed pause, begin hike cycles, begin cutting cycles starting in September. And here we go, heading into the end of August here, waiting for that September the September FOMC, where we've been saying for many months now that we may see the Fed hike, may see the hikes come. Back when people were yelling about cuts, getting really mad when I talked about hikes. Here we come. Like now we're here. Now we're here. We have in CPE core, was the CPE core earlier this week. Inflation's still up. It hasn't cooled. It isn't at the 2% target. It isn't trending towards the 2% target. And now we have Jackson Hole coming in just like 13 minutes. Let me see. What do we got? Warsh, this is going to be basically Warsh's third speech. I think it's going to be his first keynote since becoming Fed chair. Anything else coming up on this that'll be extra spicy? Basically, we're going to look and watch how markets react. The big ones today, we're going to be watching Bitcoin. Bitcoin has been having a very interesting run over the last week and a half. Gold going to be a big player here today. Of course, the dollar, Dixie, recovering from the sell-off we saw over the last few weeks, looking like a dead cat bounce to me, but we're going to see if it finds strength or weakness on the keynote today. So I appreciate you guys tuning in. I know you have many options for watching, but I'm glad you tuned in with the fam today. It's good to have you here. I appreciate you guys being in. Tom, we're still going to 38K? Could happen. Could happen. Nothing's off the table yet. Everything on the chart certainly looking much better than we were, or even early August. Things are looking much, much better. Much, much better. How's the thyroid? Doing good. Doing good, 𝐂𝐴. Thyroid is great. You know what, 𝐂𝐴? Actually, you guys know I quit vaping nicotine cold turkey now 2.5 years ago. I'm wondering if alcohol is next. I'm wondering. I went to like a wine club. I had a little bit of wine on like Monday, Tuesday. And I just felt like crap for like 24 hours. I didn't even like drink that much. Dude, I don't know. I think I'm going to take a long, hard look at the what does it give and what does it take for me. But story for another time. It's good to see you, my friend. Good to be here. What's up, Rectoverse? How you doing? 𝐂𝐴, Jesse. Zaza, what's up, man? Money Sean, how you doing? You're doing I'm guessing Money Sean's doing pretty good considering Solana. I know you're looking at Solana recently. Solana, exactly as predicted. Exactly as predicted. 108, 109. Smashing that 200-week moving average, closing directly out of trading down. Boom. Nicely done. Nicely done, everyone. If you had a solid little trade, take profit at 108, 109. You killed it on Solana. Bitcoin, what was I saying? Bitcoin's had quite a run. Nothing is off the table. That is for sure. However, the important shift, the major shift that we have seen is Bitcoin being out of the bear market. The bottom being in is on the table. It was not on the table earlier this month. In fact, up until August 19th in the morning of that Wednesday. Completely off the table. Funny how things change so quickly in Bitcoin. But completely off the table. Trading below the 200-day moving average, struggling at the 200-week. All we saw was weakness. There was just no signs of strength whatsoever. And sometimes that's exactly the time Bitcoin needs. Whether it be, I don't know, Trump's crypto meeting that he had, whatever we want to attribute it to, the U.S. Treasury committing to a easing spiral, I'll call it. Bitcoin seems pretty happy, and the energy seems to have shifted quite a bit. We've traded up. We've closed above the 200-day. We've closed way above the 200-week. We're looking at a very strong weekly close again. Already with the higher high. I mean, things are looking solid. Nothing is off the table is the important bottom line. However, it is on the table that we are now back into the bull run. It is. I still think we're going to trade back down, I mean, at least to the 200-day, wherever that is at the time, currently at 69.1. Could be lower, who knows? But I think that is at least on the table. However, things reversed very quickly, and it's just got to remind you that Bitcoin always surprises us. Whenever we are sure of what is happening, we are always wrong. That is maybe the one consistency that exists here on Popcorn. So it's going to be interesting to see how it reacts to the keynote today, to this congregation of bankers and important financial people, and all of you guys joining me here today. All right, we have like 8 minutes. What I need from you in these 8 minutes is I need you to hit the like button. I need you to subscribe to the channel. There we go. Subscribe to the channel. Hit them notifications. We're live here pretty much daily for 7 years, doing live analysis, live trades. Love it or hate it. Man, I'm just showing you what I'm doing. No LARPing, no shilling. Just good old-fashioned charting and chilling. No, a poet today. Try the best chart ever. Thank me later. Maybe I can check that out, Benjamin. Probably not going to do it right now, but check that out. Just be chat. What's up, D-Lo? How you doing, brother? Who else is here? If you're here today, put something in the chat. Let me know you're here. I have a poll going. Do you think that we are going to see a pause or a freeze to the rally, maybe even a reversal based on this keynote? Or do you think we're going to see continuation? You think we're going to see higher highs, more pumps? I want to know your opinion. It's going to be interesting to see what the chat says. What's up, Arsel? How are you doing, man? D-Lo. Derek, there he is. Derek clocking in. Welcome, Derek. Happy Friday, my friend. D-Irish the Ba. What's up, man? Jay Bird, Jesse Gelluck. I don't know if I'm saying the last name right, but I appreciate you, Jesse, here every day. What's up? What's up, FOMOnator? Echo Leaf. There you are. Dev Josh. What's up? Who else we got? Joey Trump. Cade Dolute. Chris Pax. How you doing, man? You enjoying that view change on YouTube? YouTube about 24 hours ago changed the way they count views for long form content, and virtually every channel now is seeing like just a influx of views. It's like starting on that hour. They changed the way they count them. Nothing actually has changed. Not going to go into the details right now because we got things to do. What's up, Blurt? Bullish Crypto. Charles Balside. How are you, Charles? Who else we got? Crunk, LK Stan, Matt, Money Sean, Mr. Dinkles, Romanow, Ross Smith, Ryu Kend, what's up, man? Safa Kamiri, Snowman, South Jersey Andy. How is it over there in South Jersey, Mr. Andy? What's up, Trader Skills, Wolf, Xeden Punk, and many more. Many more are going to join in today. It means happiness in English. Huh? Wait. It means happiness in English. What? I speak English, Jesse. I'm not so sure. What's up, Crypto Stevo? Give us the whole coverage. We're going to get the whole coverage. You got to wash that hole today. We're going to be washing that hole in 5 minutes. The financial innovation. What's up? There we go. Mr. The Snezilvi. No idea if I said that right. What's up, man? Be like the Snezilvi and subscribe. Your name will pop up. I'll shout you out. Send it. Nestor, send it. I agree. Send it. Hello, gamblers. What's up, Mega? That's accurate. Didn't notice YouTube view count yet? No, so what I was talking about is like in our analytics, they changed what counts as a view on YouTube, I think on the 27th. And so without getting into the details, it's like they made it easy. They're more lenient. They're more liberal as to what counts as a view. I think it's like autoplays count as views now, where in the past they might have not if they didn't autoplay for long enough. Like when you're like just watching a video, you don't hit anything, it goes to the next video. Stuff like that. Little changes. And people are seeing really big upticks in their views. Feels good. YouTube makes us changes a lot, and I feel like our views come down, so it's kind of nice. Kind of nice to have a little bonus, little buff there. What's up? There he is, Mr. Peach. Jackson's Hole. This meeting is actually going to be about pecans. The pecan market in dire straits today. You can hear that bell ringing. Maybe I'll have to turn up the volume. You hear that bell ringing? That's the pecan bell. The honorary pecan bell. I can't even... I hear... Wait a minute. What's playing? There's sounds coming from somewhere. But I don't think it's from the video. Hold up. Mute. And maybe it is coming from there. Gotta double check. There we go. It is. Those weird rumblings are coming from Jackson's Soul. These are the behind the scenes noises of bankers, Fed chairman, I don't know, fancy folk, probably a bunch of people that were on the island or on the list, you know. Rate hike September, that's what I'm still saying. FOMC meeting is in 5 minutes, 𝐂𝐲𝐧, is it? Well, there is no FOMC meeting. There is Jackson's Soul Symposium. Can I tell buy or sell blurt? I have no, like at this right here, right before Warsh speaks, I have no idea. I have no idea what he's going to say. I have no idea how this is going to impact the market. We're going to find that out right here in real time. Bitcoin looking decent. The dollar, I really still think as this keeps going on and being accurate, that this is what we're seeing. It's just floating back up maybe to the 100 mark. I don't see a super bullish future for the dollar this year. Unless Warsh comes out right now and says we're going to hike rates in September. Maybe we'll see a little rally on the dollar. Oh yeah, there's the behind the scenes sounds. You hear people like coughing and sniffling. There we go. Very cool, very cool. You'll be on in just a minute. I don't see a really strong future for the dollar this year unless the Fed really starts moving.
Good morning, everyone. Could you please take your seats?
Oh!
So, welcome to the 49th Jackson Hole Economic Symposium. This year's symposium will focus on financial innovation and the implications of rapid developments in digital currencies, central bank digital currencies, financial technology for payments, monetary policy, and the international financial system. Jackson Hole, part of the American frontier and Wild West of the 19th century, is an ideal setting to discuss this new frontier of financial innovation. The American Wild West was defined by a gap. The frontier expanded faster and less predictably than governance could follow. Settlers staked claims, prospectors chased gold, and enterprising figures built fortunes in territory the law had not yet reached. Some struck it rich, many were ruined, and for a number of years, the frontier operated largely based on self-enforcement within local jurisdictions. Recent financial innovation shows many of the same features, including the diversity of practices across countries. Stablecoins, decentralized finance, AI-driven trading, and the rapid growth of private credit represent a genuine frontier. Territory expanding faster than the regulatory apparatus. In some areas, we're beginning to see the first railroads and telegraphs, the Genius Act stablecoin framework, the BIS work on Project Agora, and the ECB's rollout of the digital euro. But the gaps in our understanding about the implications and what comes next are even larger than the blank spaces in the early settlers' maps. So we have much to discuss over the next 2 days. What are the implications of these frontier innovations? How should policy navigate the tension between innovation and oversight, between opportunity and risk? What are the trade-offs from the different approaches being adopted by different countries? The stakes are huge. As the early settlers learned, some frontier experiments ended badly, while others built the prosperity we see in places like Jackson Hole today. So to get us started, I am delighted to welcome Chairman Warsh, Chair of the U.S. Federal Reserve Board, to provide opening remarks. I've known Kevin for about 25 years when we initially worked together in the White House.
I like her.
Kevin, even during those meetings, many years ago, you were willing to push frontier thinking. And we look forward to hearing your thoughts on the latest developments in financial innovation and central banking. Kevin, coming up to the stage.
Do we think that Kevin is like an innovative thinker? Think about it.
Good morning, Kristen. Thank you for that super kind introduction.
I liked her.
It was 25 years ago that we were colleagues. It's an honor to share the stage with you. It's great to be back here in the Valley again. See so many familiar faces from academia, from my last tour of service, and from my first 100 days, which is just this weekend. I've been looking forward to this weekend. And before I go further, I want to thank Jeff Schmidt and his team for the incredible hospitality. Everybody here is in debt to you and to your colleagues here at the Federal Reserve Bank of Kansas City. Jeff, our thanks to you and your team. Now, he and the other planners here have some recreation options lined up for later today. I'd advise you to be very careful with your choices. As I learned years ago, you can take two different kinds of hikes on the trails around Jackson. I can sum up my hikes with former Vice Chairman Don Cohn with two words: I survived. These steely marathon death marches revealed a sign of Don that I was not ready for. But there's another kind of hike. This one was with former Chairman Ben Bernanke, another dear old colleague. With Ben, it was a much more leisurely pace, an easy stroll along the wandering trails of the Rockefeller Preserve. So before setting out today, my recommendation is do a wellness check. Ask yourself, is this a Cohn day or a Bernanke day?
How many times has he said hike already?
The best thing about this gathering is that it helps us all get out here to the mountains and clear our minds and think straight about our world and our time. For me, it feels like the right place and the right audience for a real engagement with the ideas that matter most. Innovation, as Kristen mentioned, is the conference theme. And I believe the public and the markets understand that innovations in the conduct of Fed policy will help deliver price stability alongside full employment. So here's a quick overview of what I'll cover in my remarks this morning. You can call it an outline.
Hikes.
You can call it a trail map. But
Trails.
please just don't call it forward guidance.
Hikes, trails.
First, I'll touch on a few of the longer-term questions we're asking at the Fed about the latest general-purpose technology, AI, and where it might take the economy. Then I'll reflect a bit on the practice of forward guidance and the interaction between the central bank and financial markets. Next, I'll present some of the key principles that I believe should guide the conduct of monetary policy. And finally, I'll give you my assessment of what's happening in the economy. So first, I think we should try to prepare a bit for future policy conjunctures. With the unchanging picture of the Tetons as our backdrop, we are here to survey an economic landscape that is anything but static. It wasn't so long ago, including in rooms like this, in the run-up to the crisis of 2008 and over the decade that followed, when economists and policymakers were speaking of secular stagnation, speaking of a global savings glut. It was a widely held view that an excess of capital would sit on the sidelines for a very long, long time because there just wouldn't be enough compelling investment opportunities. All the good stuff, you'll recall, had been invented, so growth would be low and slow. Well, times sure have changed. We've come to a hinge point in history, to borrow a phrase, a framing from my former mentor, George Shultz. To cite the clearest example, progress in AI, the 80-year-old name for the newest technology, has been faster even than its evangelists predicted just a couple of years ago. The potential for substantially higher growth is on the rise. Ever-expanding pools of capital pouring into AI-related infrastructure of all sorts. A kind of super Moore's law seems to be playing out. Scaling laws, too, are changing both the method and speed of innovation. Capital and labor have combined to create large language models at the heart of AI. Users buy tokens to gain access to these models. Reports put annualized token sales for the two leading labs alone at more than $100 billion, an increase of 500% from just 12 months ago. We at the Fed, we watch all this attentively. We recognize that AI is a new variable, potentially a new factor of production that will have consequences both for the economy and for the conduct of monetary policy. It opens up some major lines of inquiry. Will the application of AI cause a significant sustained rise in productivity across the economy? If so, when? Will token usage be complementary or competitive to labor? Will the next generation of AI models demand even greater capital intensity too? Or will the models themselves help devise a capital-light solution? Among the other yet unknowns is the resulting market structure. Who gets to make the money? It's not obvious where the returns on capital will land or on what timescale. Early on, how much of the surplus goes to owners of scarce assets, the AI labs or chip makers or energy producers or cloud providers? Over time, how much of that value accrues to businesses and consumers? And importantly, what are the implications for workers and for the employment side of the Fed's mandate? Likewise, we don't yet know the equilibrium price of the tokens that give access to these models. Might there be a heterogeneity of tokens, such that growing sums will be paid for the access to the best models, those at the frontier? Will token prices for older models fall to the level of their marginal cost? Well, we'll be thinking through these matters with the help of a task force on productivity and jobs. My early check-ins with the leaders of that task force and the rest have been very encouraging. To be clear, though, their recommendations will come later and have no bearing on decisions we make in the current policy conjuncture. But I believe that for future policy challenges, this intellectual investment today will leave us much better prepared for tomorrow.
What is he talking about?
Next, let me say a word about forward guidance and its substitutes. As our task forces go about their work, as you might know, I'm not waiting to introduce innovations at the Fed to help make us fit for purpose. To highlight one example, I've set out to change the form and function of the Fed chairman's so-called forward guidance. You might know about my longtime discomfort with early pronouncements of future policy decisions. I much prefer another path, and now we'll make the case for it. Transparency in communications about future policy decisions is not an end unto itself. Communications must be in service to the Fed's paramount responsibility. And what is that? That's getting policy right. Forward guidance as a regular practice was adopted by my colleagues and me during the global financial crisis. It was essential at the time, and we introduced it with much fanfare. But as with other legacies of crises past, I believe the practice has outstayed its welcome. In normal times, the role of forward guidance should be limited and circumscribed. Otherwise, it risks creating ambiguity in the name of clarity. Oversharing policy deliberations and overcommitting to future decisions can lead markets, businesses, and households astray. And I believe when policymakers make quasi-commitments on interest rates throughout the cycle, We inhibit our own freedom to make the right calls when it's time to decide. To get policy right, we also need to get the relationship right between the central bank and financial markets. The Fed needs clear market signals, as unfiltered as possible, from market internals, from the level and change in asset prices across sectors, the prices and trading volumes of Treasury securities, the foreign exchange value of the dollar, the cost and availability of credit, a broad set of commodity prices. These and other indicators should inform the Fed's near-term outlook on economic activity and inflation throughout the business cycle. They should also reveal the state of broader financial conditions and the risks and uncertainties of the financial cycle. At the same time, market participants themselves should be tracking real information about the real economy. They should draw their own conclusions, form their own expectations on things like output and employment and inflation, and they too should stay sharply attuned to risks. In my view, the Fed should be humble and never naive. The Fed plays an essential role in the economy and markets. Our tools are powerful. We determine the path of short-term interest rates, and market participants will always try to anticipate what we will do next. But we should not indulge a regime in which market participants are looking primarily to the Fed for their next trade. The economic literature has long described the distorting effects, what it called the Hall of Mirrors problem. If markets rely materially on the Fed's guidance and the Fed relies on market prices, we're more likely to be blinded to new developments, more likely to be caught unprepared, and more likely to commit errors in policymaking. Now, perversely, market participants are unlikely to bear the biggest costs of the Hall of Mirrors problem. The most serious harm is likely to befall those without any financial assets. If the Fed gets inflation wrong and judges the economy wrong, who gets the worst of it? Not the financial high flyers. Hardworking Americans are the ones left to deal with inflation that's too high or jobs that suddenly appear less secure. So, if forward guidance is ill-suited to normal times, how about the new Fed chief commits at a meeting just like this to some explicit reaction function? Surely he could tell us his interest rate path if, say, the data were to come in hot or cold. Well, I wish our understanding of the economy were so precise as to provide a mechanical, tried and true answer, that some simple function, like a Taylor rule, could be rigorously relied upon. But our knowledge just does not extend that far, at least not yet. And other factors most relevant to the proper conduct of monetary policy, they change over time. Providing forecasts to illustrate the Fed's reaction function works better in theory than in practice, better in the lab than in the field. I am not alone in noticing that forward guidance in 2021, to cite just one example, might well have slowed the policy response to high inflation. In my term as chairman, my colleagues and I will endeavor to construct more reliable models, more robust rules, and we'll do this knowing that accuracy in forecasting is still just an aspiration. With so much changing so fast in our geopolitics, global supply chains, technology, it's wise to be modest about what we can and cannot know as we sit here today. In the same spirit, we should receive the full range of ideas on matters that may inform the Fed's monetary policy discussions. If the aim is optimal decision-making, and it should be, we should not crowd out views on the economy. How then to chart a better path to policy? In the balance of my remarks, I will share with you some key principles that guide my thinking on the appropriate conduct of monetary policy. And then I'll offer my promised assessment of the economy. So let's turn first to principles.
Damn.
First, I've noticed in this line of work, yesterday's news has a way of getting mistaken for what's happening right now. The challenge is to know the difference. In other words, we must interrogate reality. Make sure we're not setting forward-looking policy based on stale or inaccurate data. Nor should we rely on isolated data points. Trends matter most. The Fed's a decision-making agency. We make choices amid uncertainty, and the data upon which we draw must be relevant, contemporaneous, accurate, and as actionable as possible. Second principle. The Fed's actions are intended to ensure that the aggregate demand side of the economy is broadly consistent with aggregate supply. However, all we observe directly is activity. We never see and can only infer what's really happening on the supply side. Hence, evaluating the current and expected balance between aggregate supply and aggregate demand is imprecise. Third principle, there should be no misunderstanding. The Fed's price stability objective of 2%, as measured by the PCE price index, is a firm, fixed target. Let me be equally clear about another aspect of this objective. Price stability is not self-executing, nor is inflation necessarily mean reverting. It's the Fed's job to deliver stable prices, no excuses. Fourth principle, the Fed also bears responsibility for maximum employment. Achieving both sides of our mandate over the medium term is not an either-or proposition. I do not believe the Fed's dual mandate works at cross purposes. After all, high inflation itself is very harmful to economic prosperity. Fifth principle, short-term interest rates are the predominant tool to achieve the dual mandate. Unconventional policies to spur economic activity may suit genuine crises, of which we all have much experience, but they should otherwise be used sparingly, if at all. Sixth, money matters. I know it's not fashionable these days, but my view is that money has something important to do with monetary policy. We should pay attention to money created by the central bank and money that comes from the banking and financial system. It's true that financial innovations, the subject of this conference, and other factors alter the mechanics that link the monetary base, the velocity of money, and the broader economy. But that is scarcely a reason to ignore the ultimate effects of money on financial conditions and prices. Finally, a quieter Fed, a more purposeful Fed in its communications,
More quieter.
is
Shut
better
up.
able to meet its objectives. And we can be held accountable for delivering on our remit, the only true test of our credibility. To borrow a line from General Chuck Yeager, at the moment of truth, there are either reasons or results. So having heard a little bit about AI and general purpose technologies, having heard a little bit about the next policy conjuncture, a little bit on principles, let's turn to the economy today. Given those principles, how do I read the economy? What's really going on outside the window? It's a little ironic, there are no windows in this room, but they're big ones at the Federal Reserve. And we've been using those in my first 100 days, and I expect we're going to continue to use those in the period right ahead of us. Now, you may have read in the July minutes the unanimous view of the FOMC. Labor markets were stable, output solid, but inflation remained too high. A good majority of my colleagues and I thought the wiser course was to await new information in the intermeeting period, especially given possible developments in supply chains, investment flows, and geopolitics, before deciding whether a change in interest rate policy was advisable. And we expressed our joint readiness to act as circumstances require. For my part today, as we sit here, I'm impressed by the overall performance of the economy, which appears to have strengthened. One indicator of strength is how well an economy holds up under stress, how well it holds up under shocks. On that score, both Main Street and Wall Street have been remarkably resilient. Several other observations. Business CapEx is rising rapidly. The 4-quarter change in investment in equipment and intangibles has been around 9%, its highest growth rate since 2021. And more than half of the CapEx growth can likely be ascribed to the build-out related to AI. What about profits? For the firms in the S&P, profits have grown more than 20% over the past year alone. Profit margins are quite elevated relative to history. Overall equity and market volatility, quite low. We're staying keenly focused on market internals, watching performance across sectors. Expectations for both growth in CapEx and corporate earnings are running quite high. I continue to watch the change in the growth rates, the second derivative. The follow-on effects on asset prices, business confidence, consumer incomes and spending are equally important to gauge. Credit spreads on corporate bonds and leveraged loans are near the low end of their historical averages, and issue volumes this year quite strong. Looking beyond fixed income markets to the banking business, in the July so-called 𝐒𝐈𝐆𝐍 survey, banks tell us that standards for C&I loans are on the easier end of their historical ranges. That helps explain their growth that we've seen this year in these loans. In my view, credit and loan markets are showing few signs of policy restraint. Now, certain sectors, like housing and agriculture, are showing strains. But on balance, I would be hard-pressed to describe broad financial conditions as restrictive. Real consumer spending has been healthy despite these shocks, increasing more than 2% over the past 4 quarters. If you combine consumption with the brisk investment we talked about earlier, private domestic financial purchases have also risen. These purchases have increased at a pace of nearly 3% or so far this year. That's a measure that typically carries more signal than GDP. The trend here too, positive. So on the employment side of the Fed's dual mandate, our country's doing well. Labor markets are quite stable. The jobless rate at 4.1% remains low by historical standards and hasn't changed much in a couple of years. Unemployment claims on a 4-week moving average, an empirically robust real-time indicator, are near their lowest level in decades. In my view, the relatively low turnover in today's labor market is partly a result of the significant rematching between employers and employees that happened in the post-pandemic environment. But when labor supply is barely growing, monthly job gains are naturally going to run low. There are always areas of concerns in the labor market. For example, among recent graduates. In general, though, people who want to work, by and large, are holding or finding jobs. They may well be concerned about future labor disruptions, but as of now, I believe the labor markets are broadly consistent with full employment. But on the price stability side of our mandate, the numbers are more concerning. The Fed's preferred measure of inflation, the one I talked about earlier, the 12-month change in the PC price index stands at 3.7%, with a 6-month change a little above 4. The comparable measures from the CPI index are also elevated, as are core measures both of PCE and CPI inflation. And none of these measures are perfect, but they all tell a similar story. Inflation is running above our 2% target. So the Fed's predominant focus right now should be on prices. So what's our job? The job for policymakers is to capture underlying trend inflation. Easier said than done. We want to gauge whether underlying inflation is rising, falling, or seems to be stuck in place. We also want to understand not just the direction of travel, but the speed. Each of these broad inflation measures have fallen significantly from their highs of a few years ago, but progress over the last couple of years has been more modest. And while this summer's PCE and CPI readings were better than expected, they do not tell me that underlying trends have meaningfully improved. The data also show moderate wage growth.
There we go.
But in my view, in tracking underlying inflation, wage growth has not proven a reliable indicator of future inflation for a very long time.
He's actually hitting stuff
So to
here.
try to gauge underlying inflation, I want to tell you about a couple things I've always looked to.
Okay.
I find it instructive to disaggregate the 199 individual components of the PC price measure. Over the last 12 months, 54% of goods and services in this basket showed price increases above 3%.
Listen up.
This is well below the post-pandemic highs of about 77%, but it remains well above the level of 32% in a couple of the decades that preceded the pandemic. Looking over just the last 6 months, the conclusion is similar. 49% of goods and services in the PC basket showed price increases above 3%. Again, this is well below the post-pandemic highs, but still elevated, quite elevated. The recent rise in overall commodity prices also bears watching. What we need to judge is whether the trends we see indicate upside inflation risks. Now, it matters, too, whether the inflation readings of the past 5 years have seeped into expectations.
Of course they have, though. That's silly.
Is that measures of inflation expectations in the medium term, by and large, look stable. And inflation compensation measures from the swaps market send a strong and similar message. Especially in light of recent developments, it's a credit to the Fed as an institution, consistent with the best of the Fed's traditions, that market prices show confidence that we will deliver price stability. And I can assure you, they're right. The thing about market measures of inflation expectations in economic history, I know some economic historians in the audience, is they all tend to look really strong and durable until they don't. These expectations are not pushed around easily, and right now they are very well anchored. But they must be closely minded, and it's the Fed's job to make sure that inflation expectations do not get unanchored. Now, there is one signal nobody can miss. The responsibility for 65 months of sustained elevated inflation sits squarely with the central bank, and that's where it belongs. So here is my standard. We must be confident that underlying inflation is moving to our objective, clearly and at sufficient speed. Otherwise, we have work to do. That's our job, that's our mandate, and that's our charge to keep. So I've covered quite a bit of ground in the last 25 minutes or so. Let me see if I can conclude this way. I stand here today committed to a discipline, not a decision. My Fed colleagues and I are hardly the first to hold these positions in a time of great consequence. We are determined to redeem the time by doing our very best work. For those of you that know us, you'll know the following is true. We take our responsibility seriously, with humility and with resolve. We know so much depends on the choices we make. Sound monetary policy helps households and businesses to prosper. When carried out effectively, it broadens and deepens the momentum of our economy and helps to secure America's leadership in the world. And I know that our country needs us to think carefully and act wisely, perhaps now more than ever. It's a tremendous honor to serve once again at the Federal Reserve. I'm truly grateful for the encouragement, good counsel, and the warm reception I've received in my first 100 days from my colleagues. I'm also honored and grateful for the views that I've gotten, solicited and unsolicited, from so many of you in this room.
On the tubes.
For that, and for your kind attention this morning, I say thank you. Let's get on with the rest of the program.
The dollar is ripping. I guess he's the Fed chair of AI now. It's like all he talked about. That's all he talked about. All he talked about was AI. He said pretty much nothing.
For getting the conversation going, could our first set of panelists come up to the stage? Kevin, thank you.
Ew. Wow, they just ushered her right off. They said, no. I liked her, though. She had good energy. I liked her. She was smiley. You could hear her smile while she talked. What even was that? I guess they're not going to stream the rest of... I guess they're not streaming the rest of the symposium? That seems honestly kind of crazy. Let's see. Maybe we can find a feed. What are your guys' thoughts here? Because I will share with you, that was crazy. Do you guys notice how often Warsh says something like, the Fed should communicate less? And you're like, that could make sense. Yeah, I mean, maybe they're over communicating. And then goes on and just communicates just forever. And then he says something like, we've had high inflation for 5 years, and we should increase interest rates to combat high inflation. And then we're not increasing interest rates. I don't understand. What is it that he's saying? What is it that he's saying? Nope, that already ended. That already ended. Is it being covered anywhere else? I'll look for it. I'll look for the link here. Let's chat. Let's just like digest this here. I feel like he spoke a lot about what the Fed should do or what should be done or how they should act without at all getting, like actually getting into how that is. Just like topical. I'm just very confused. Like, what did he talk about? It was almost as if he was just there to say the words AI. Also, can we let's rewind here for a second. For the first 10 minutes, maybe the first 5-10 minutes, he was telling a story about hiking. About hiking. What? Like about hiking as the Fed chair, the one who we turn to hear if the Fed's going to hike interest rates or cut interest rates or pause interest rates, started a story talking about hiking, saying how there's different types of hiking. Like, was that supposed to be clever, or like what was it there? Like, was it clever? Do you guys think it was clever? I'm confused. It seems like he came out and just spoke about AI. How much was he talking about tokens? AI tokens were the best models, is perhaps those will be more tokens, and then maybe the older models less tokens. Do you think that maybe there's some confusion? I kind of think there's confusion here with like a lot of these older people. Sorry, older people out there, you guys are great. I love you, older people. But these older people, the ones in government, the ones maybe at the Fed, when it comes to AI and tokens, and then like cryptocurrency and tokens, I feel like they might not know the difference, and they might kind of like think they're the same thing, but maybe they're too afraid to ask kind of scenario. What was that speech, Nimoy? What was it? He wants to quicker here with actually a really good point. So suggesting that maybe he's trying to build credibility. He's trying to show people that he isn't a puppet of obviously Trump. And that the task force is going to provide data, and that data is going to make it a better Fed. I can go down that. I can go down that alley. I guess where I'm stuck is everything he has said has directly suggested that they need to hike interest rates immediately. I'm not even saying like an emergency hike of like panic hike or something like that. No, but as in, listen to the way he talks about inflation, how it has been. He says inflation has been above target. Inflation has not cooled significantly. Or it's cooled since pandemic, but is not trending in a cooling manner back to the target. And then he will say in a separate sentence or a separate kind of paragraph that the Fed's tool, he drove this home a bunch of times, like kind of a few times in the speech, was that the Fed's tools to address inflation is the interest rate, the short-term interest rate. He said the other tools, basically he was saying quantitative easing and tightening the Fed shouldn't do. That's basically what he was saying. He was saying like, we should be, oh wow, check this out. He was saying basically that the Fed shouldn't use quantitative easing and tightening. They should use interest rates as their tool to do this. And then doesn't say that they need to do that. It doesn't add up. Look at this. Did this just swing rapidly? Or, I mean, I'm on the spot here. I'm kind of fielding a few things at once. We just looked at this for September. It is now a 50-50 after that speech. Did that change? I just showed this. A rate cut is a must. Good luck. Fringe Lord. He's always saying what we will or should do and never what we are doing. I like that. That's spot on. Wait, I just pulled this up. Who was watching this maybe like 5 minutes ago? Not even. For September. This changed. Did this go down? No, well, versus yesterday, the interest rate hike jumped up to 50% from 35. Wait. In October, about a 66% chance of a hike, 50% chance of 25 hike, 16% of a 50 hike. It changed. It was 34% for no. Wait, for no. But no, that would mean that this went up. Wait. By the end of the year, it was 75. Whoa. So here we go. I think we read this meeting correctly. We looked at these numbers just 5-10 minutes ago on the live. You might have missed them. By the end of the year, we were at a 75% chance of an interest rate hike. Doesn't matter what BPS, just that it would be higher than now. We have roughly a 0% chance of cut. After this speech, so this has updated just in the last few minutes, we are now down to a 17% chance. That is a huge swing. Less than 1 in 5, right? 17% chance of no cut, or no hike, sorry, by the end of the year. 42% chance of 25, and basically a 42% chance of higher than 25. The market, I think correctly, because we keep saying this, correctly reading Warsh's comments. Warsh only has spoken in his short time as Fed chair, these last 3 months. He has only spoken hawkishly. He has only said that inflation is not under control. He has only said that it's not like trending towards control. He's constantly brought up that interest rate hikes are the tool to do it. Do you think that he's softening us up for hikes? It seems weird. No hike is the new cut. That's true. AI detection ran those numbers and just heard hike 15 times. Yeah, maybe. Mine CQ says 100%. It's weird to me. We keep hearing him talk, and yet people keep kind of thinking dovishness, but nothing he says is dovish. The only thing dovish, and this is going along with what Brendan just said, the only thing dovish is that he's saying what they will or should do and not doing it. I guess that's dovish, right? What's interesting here is Bitcoin and NASDAQ both sold off into the start of that keynote speech. We saw the Dixie, the dollar, pump with some strength here. We noted before the speech, though, that the dollar is in kind of what I want to assume, or what I see as an analyst, as a dead cat bounce. The dollar is very difficult to predict. It's very whimsical. It is a very difficult asset to predict its movements. But I see this as a dead cat bounce. I see this as a return to this 100 level, roughly. This is a really historical, really high liquidity, very traded level. It acted as resistance all year. We broke it. We temporarily had support there. We lost it. I think we're coming back to see if resistance will hold. I think it will. But I mean, we also have the 618 retracement here. I think that this is currently just part of this bounce. I don't think that it's actual strength. But the dollar gaining strength there off that speech, and I'm not exactly sure why. It does make sense when the dollar gains strength, especially suddenly, that we see other assets like Bitcoin, gold, stocks, whatever, sell off a little bit. Strong dollar, weaker asset. Gold seems the most impacted by this for reasons I can't or don't understand. Gold sold off down about 100 points from that speech, and it hasn't recovered, where we are seeing currently both NASDAQ and Bitcoin back to the levels basically that they started at. Look at that. This is why I say we never want to trade Fed stuff. Look at this. That beautiful inverse head and shoulders. Boom. I didn't even really catch that. I was so busy being mystified. It really felt like his whole speech was intentionally just trying to make you not pay attention. Did anybody else get that? Or perhaps that was my ADD. I know a lot of us have ADD here. Was that it? Was that the vibe? It was almost like hypnotically droning on, talking about the different principles, the different principles of the Fed, and the principle 1, principle 2, principle 3. Like, what are you even talking about? That's really weird. I see other streams like CNBC streaming Warsh, but it's already over. Are they just like looping him? I wonder if I just looped him, what would happen? Maybe we just loop him. Maybe we loop it. You think that would be, you think people would just keep tuning in being like, yeah, let's loop it? I don't know if I can do this whole speech again. Maybe. Not his whole speech. Let's see if there's any critical pieces.
Either reasons or results. So having heard a little bit about AI and general purpose technologies, having heard a little bit about
I almost want to listen to it again.
Conjuncture, a little bit on principles, let's turn to the economy today. Given those principles, how do I read the economy? What's really going on outside the window? It's a little ironic. There are no windows in this room, but
oh yeah, that
big
joke
ones
flopped.
At the Federal Reserve.
Big window.
We've been using those in my first 100 days.
The windows.
I expect we're going to continue to use those in the period right ahead of us.
It's been hot, and we had to open them.
You may have read in the July minutes the unanimous view of the FOMC. Labor markets were stable.
Please no.
Solid. But inflation remained too high. A good majority of my colleagues and I thought the wiser course was to await new information in the intermeeting period, especially given possible developments in supply
guys,
chains.
we've said it. We've said it before Warsh was even chair. Before Warsh was even the chair. We've been saying on this channel a hike in September.
And we expressed our joint readiness to
after
act
today, I think it's
circumstances
cooked, it's booked. Said it, forget it.
For my part today, as we sit here,
going for a nap,
I'm
that's
impressed
okay.
by the overall
I appreciate you
performance
tuning
of
in,
the
Metaspace. You're the man.
which appears to have strengthened. One indicator of strength.
Honestly, was
Well,
that
the economy
speech
holds
AI
up under
slop?
stress.
Do you guys think it was slop,
How
like
well
for
it holds
real?
up under shocks.
What's
On that
going on
score,
today?
Both Main Street and Wall Street have
This
been
man.
remarkably resilient.
Remarkably.
Several other observations.
I guess that's true. They have been.
Business CapEx is rising rapidly. The 4-quarter change in investment in equipment and intangibles has been around 9%, its highest growth rate since 2021. And more than half of the CapEx growth
The
can
token
likely
talk
be
was so
ascribed to
weird.
build-out related to AI.
Yeah, how many were
Profits.
not this but this
For the firms
statements?
in the S&P, profits have grown
How
more
many
than
times do you
20%
say
over
it's
the
not
past
this?
year alone.
How many times did he list things
Profit
like
margins
AI?
are quite
Many.
elevated relative to history.
Not this and
Overall
but
equity
this.
and market volatility quite low. We're staying keenly focused on market internals.
I think he was trying to
watching
soften
performance
us up for
across
September.
sectors. Expectations for both growth in CapEx and corporate earnings are running quite high. I continue to watch the change in the growth rates, the second derivative, the follow-on effects on asset prices, business confidence,
Ooh, gold didn't
consumer
quite hit the
incomes and
200.
spending are equally important to gauge. Credit spreads on corporate bonds and leveraged loans are near the low end of their historical averages, and issue volumes this year quite strong. Looking beyond fixed income markets to the banking business, in the July so-called SLOOS survey, banks tell us that standards for C&I loans are on the easier end of their historical ranges. That helps explain their growth that we've seen this year in these loans. In my view, credit and loan markets are showing few signs of policy restraint. Now, certain sectors, like housing and agriculture, are showing strains.
Yeah, watch this again. That's fair. That's fair. We'll turn it off. We'll turn it off. Dude, what was that? What even did we just watch? I feel it honestly felt like almost just an advertisement for AI. What's really weird, and I keep yelling about this during the FOMCs or after the FOMCs, is that the Fed, since Warsh, have you guys noticed this? Since Warsh, the Fed just talks about AI. That's it. It's like their only topic. Guess what? That's not your topic. That's not your job, son. That's not your job. That's not it. Like, not only is it not your job, I have this feeling that you just really don't know that much about it anyway. Right? It's very strange. It's very weird. It's very uncomfortable. It's very uncomfortable. It's like, are AI companies like piloting the Fed now? Is that it? Is it they just trying to get us to invest in it? He talks a lot about how he doesn't want to give forward guidance, right? He doesn't want the Fed to be setting expectations. He doesn't want people to be, quote, as he said, planning their next trade based on what the Fed does or what the Fed says. Yet, how often is he talking and promoting AI? And saying, like, he talked about tokens, of spending tokens. But how often is he essentially saying AI, or putting our eggs in this basket? What do you think that is doing? You don't think that that's the Fed giving forward guidance, like pushing? Like, that's exactly what it is. It's very weird, and it's very uncomfortable. Maybe Warsh is AI. If he is AI, I feel like he's loosely, like, based on RFK Jr. You guys notice, I don't know if his throat gets dry or if it's because he's nervous, but occasionally during his speeches, he'll have kind of that, like, that throaty twinge that he has. Like, I don't know. Sailor AI slot videos are the best. I don't want the people that are making the biggest decisions, the most important decisions for our country, using AI to do it. Like, it doesn't mean that the AI can't be involved in the process. It doesn't mean that they can't, like, I don't know, go over all this policy, go over all these things, and then, I don't know, feed it into AI and see what AI says about it, right? That would be okay. But I don't want the most important people, like Chair Warsh, going to ChatGPT and being like, ChatGPT, should I cut or raise interest rates? Like, that's a recipe for disaster. If you are an expert on any topic, go chat it up with Grok or ChatGPT or whatever. Go chat it up. Get into the nitty gritty of whatever you're an expert on, and you will find that it's like, it doesn't know what it's talking about. It's just sounding good. It's enough that it sounds really good to people who aren't familiar with the topic. I've asked it about, like, blockchains and things like that, especially when it first came out. And it was just like using jargon really fluidly and like sounding good. But I was like, dude, none of this actually makes sense. Like, none of it makes sense. He has to convince ChatGPT that he's the Fed chair. That could be true. Maybe there's a little power struggle going on. Yep, exactly. You don't even need to get into the nitty gritty, like 2 thoughts deep, and it's basically garbage. We don't want the Federal Reserve, the people essentially piloting our money, piloting the world's money, the global reserve, with AI. And that's all he seems to talk about now. It's very worrying. It's very, very worrying. What's interesting is the U.S. Treasury. I'm going to come back to this for a minute. It's interesting that Warsh has really nailed the topic that they are essentially, he's using different words, but saying they're not going to do quantitative easing. No quantitative easing. Essentially, maybe no quantitative tightening, but no quantitative easing, which is what everybody wants for their bags of pump. It's interesting that Warsh has basically cut that out of the equation, and the U.S. Treasury has stepped in the last week, 2 weeks. In the last 2 weeks, the Treasury has stepped in and basically said, hey, we're going to do it. You don't have to do it. We'll do it. It's interesting. Crypto Steve O, if you're still here, he said, has the Fed or could the Fed ever raise interest rates and do quantitative easing at the same time? Where he said, is it possible? Of course it's possible. I doubt it's ever happened. It's illogical. They're at odds with each other. There's no reason that the Fed would do that. I'm not, to my knowledge, they've never done that. Maybe they have, but interestingly, we could be in a scenario where that's happening. If the Fed does indeed cut interest rates in September, which we saw the probability of jump up to 50-50 after that speech, and the Treasury continues to feed into buying its own bonds back, we are essentially seeing raising interest rates and quantitative easing at the same time. It's interesting. The only hike Warsh is doing is up the mountain to Jackson Hole. That's funny, actually. Memos or other platforms watch streams. Yeah, we got this going everywhere. We got it live on everywhere, my friend. X, Twitch, Kick, Facebook, usually TikTok. I don't do like the FOMCs and stuff on TikTok because for some reason they always like take me down. They like strike me and shit. Oh, I mean hike. I always mean hike. If I say cut at all, I mean hike. We streamed through the cutting cycle and my brain is still like weirdly there. I brain fart and say cut a lot. You're a lawyer? Okay, Jet, that's a perfect example. Jet's a lawyer and says it sounds good, but it's almost always off. And that's the perfect example. I think a lawyer is a perfect example. I think a doctor would be like an even better example of like, I asked ChatGPT how to do a neurophlebotomy section. And it's just like, oh, you followed the directions and they're dead. And you're like, oops, you're right. You're totally right for calling me out there. You shouldn't just remove the patient's brain. Do you want to brainstorm ways on how we can write an apology letter to the family? You're just like, thanks, bro. Anyway, I agree, Jets. That people don't understand AI in its current form, like LLMs in its current form. People don't understand them, and they don't understand. They think when they think LLM, they think AGI. That's what is in their head. It's like it's a general artificial intelligence, and we're not there yet. Hopefully it's possible. I agree that a general AI, if it can be done, will probably make a lot of decisions for us. Humans are bad at decisions, so it would be good to be able to turn them over. What's up, Steve-O? Optical Art, my guy. Optical Art Crypto. Good dude. Lower rate, cheaper interest rate on debt, print money to pay off debt. Then, I mean, that is absolutely a possibility or an outcome. What happens in that outcome? This chart sees some levels we haven't seen since probably a very long time. You probably see some very low levels on the Dixie. That would tank the dollar, and maybe that's the plan, right? Maybe that's the plan. Could be. The Dixie, though, is a weighted basket. So you have to wonder, if the U.S. does tank the dollar, will all other currencies tank their currencies at the same time? And if they do, the Dixie, in theory, could like move up. Its purchasing power would, just implode. But it could gain against, on this chart, like on the Dixie, against other currencies if they dump harder. What's up, Mega Man Mike? How you doing, brother? Trial kick? Cool. At least he pumps your bags a little bit. We'll pull back prices up, pulling up again. Let me see. I think Ethereum looks very good. Ethereum, we made the call. The call was correct to the 200-week moving average of 2,500. Here we are, Ethereum testing resistance to 2,500, higher lows. I think 3,300. This is Ethereum's favorite level in the whole wide world is 3,300. It's traded at 3,300 a bajillion times. I think that's the next upside target right up here. If it does not break to the upside and this pattern fails, which I'm not betting on at the moment, 2150. I think this could be a solid entry, whether it's just back to 2,500 for a higher low, paint out some kind of janky inverse head and shoulders, or all the way up to 3,300 from 2150. I think those are both solid plays. Solid plays. I agree. Yeah, mate, spot on. That's what I was saying actually right after the speech, was that NASDAQ and Bitcoin both dumped on that speech. Like, no doubt dumped. Like, immediately as soon as he started speaking. Gold dumped with it. The dollar pumped. Yet, Bitcoin and NASDAQ actually higher than when it started. Bitcoin basically struggling for where it was. NASDAQ and Bitcoin recovered. Gold's still down. So that's an interesting, maybe not quite as expected move. The heck? What is that? What is that? I don't even know what that means. Mods, what does this guy say? What language is that in? I'm so curious now. A lot of like weird energy today. English detected. That's not English. Detto stupido by wait. I told you, you idiot, buy a 4,550. What? I guess that was Spanish. I don't know what that means. We'll show it. Pumps crypto bags to drive interest back into crypto. More oversight, more demands for some bonds, debt. No foreign governments buying now. Tether, yeah, dude, Tether. It's interesting how a lot of us old heads in crypto joined because down with the dollar, down with fiat, down with the world currency, right? And weirdly, Tether, obviously not Bitcoin, but Tether, stablecoins are maybe like one of the things keeping the dollar floating right now. Tether buying a ton of US bonds. Likely the reason that we have seen no crackdown, virtually no crackdown on stablecoins, and why I don't think we will, and why we see the government talk about stablecoins all the time, is likely because Tether buys a lot of our debt. The rest of the world's offloading it, Tether buying it. Stablecoins are probably untouchable for a while. Silver recovering? Let me look at silver. Skilver. I appreciate you guys tuning in today. That was something. That was absolutely something. Happy Friday, by the way. If you're hanging out here with me today, cheers to you. Make sure you hit the like button and subscribe to the channel. Silver short filled. Silver touched 71.30. Short filled, baby. Almost stopped out our short from July. Short filled at 71. Ooh, oh no. Oh no. Oh no. That's not good. That short's in trouble. That short's in trouble. That's a more recovery than I would like for that short. I didn't take it though. I should have, but I didn't take that trade. Pretty crazy wig down. At this point, I just can't. Only a month ago, I was saying it's just impossible to look for longs in crypto. I gotta look short. I hate doing it, but I gotta look short. Here we are a month later, and just everything has changed. Now I'm only looking for longs. Silver might be an exception, though. Let me see. Where are we at? Dang, silver's 200-week moving average is all the way down here still. I think the short on silver, it was the right play at 71. You know, even the best trades lose sometimes. I think that's the play though. 71 was, let's see, major support after the rally. February broke through resistance in March, broke through support in April, I'll say support in May, broke through resistance in June. This is like a major level here for silver. That 200-day moving average now overlapping with it. That's some beautiful confluence for resistance. I think that was the right play. What do you guys think? September 15th is the day. Yeah, we're going to see some big spice. Why am I bullish on crypto with rate hikes coming? It's a really good question. So, am I bullish on crypto? Gosh, is that the question? Nice. Bitcoin now recovered. Just like NASDAQ, Bitcoin has recovered the losses from Chairman Warsh's AI rambling. Why am I bullish on crypto? So, here's why I'm bullish. I'm bullish. One, I'm always bullish, baby. Two, I had set out over the last many months. We've been live here. I don't know if you tune in regularly, but we stream regularly here. 7 years live on YouTube. For the last, the entirety of the year, perhaps even some of the year before, I've had one very simple validation or invalidation for my stance on the market. I was looking at the greater picture of the 4-year cycle, which we have seen repeat over and over. We've been largely on track with, completely on track with up until this month. And so I was viewing the market through this lens of we should expect a low in the bear market to be over at the end of the year, Q4-ish. And I said, I'm going to be short-term bearish. I'm going to look for shorts until either A, we get past Q4 of this year, let's say into the next year, I will become bullish again and be looking for an uptrend. Or, and I said, I don't think this will happen, but I said, or if Bitcoin is able to retake the 200-day moving average, I will then flip my stance. I will then look for longs, at least in the short term or in the term, as long as we're above it, right? If Bitcoin returns back below, trade back down here, then I'll be bear. I'll look for shorts again. But as long as we're above that 200-day moving average, I'm looking for longs. We have not in the past, we have not broken back above and closed above, retaking the 200-day moving average until the bear market was over. We did it here in August somehow. We haven't given back the gains. We've regained this major bear market trend line. That's hugely bullish, I think. We spent a little time below it, pop back above. So basically, the reason I am bullish is my invalidation hit. This was just my thesis. We're still here. As long as that remains true, we're Gucci. It's only, 13% move to the downside, back to that 200-day. That's where I'm at. I think as a good trader, you have to stay dynamic. I didn't see a reason to diverge from the 4-year cycle until we had actionable evidence, literal chart, technical evidence that something different was happening. We did not have that until this month, until the closes above the 200-week. That is different. It doesn't guarantee. So this is a big thing I want everyone to understand about what I'm saying. Is in no way am I saying this guarantees that we're in the bull market, that we can't have a lower low, that the low won't be in October. It doesn't guarantee any of these things. But what it does for me is it changed the market from bull trends upward, real big upward moves are off the table. I wasn't looking for them at all. They're off the table until the end of the year or the 200. And now it's back on the table. That's really what it is we've gone from something is like not in consideration to it's in consideration again. That's where I'm at. Things can still play out exactly as we've been thinking all year. I like this scenario where it doesn't, where it's different. I think that it's more punishing. I think that every person in the space is looking for a low in October, November, December, whatever. I think that it not happening then is the ultimate, is like the max pain. I think people are sidelined. There really was just no good reason to think the bottom was in. Like come June. Like really, the bottom was all but in February. There was no reason to think it would be. We traded, 10% lower? 5% lower? There's nothing here that would suggest it. Now we have something that is at least saying, hey, this is possible. Bitcoin could be back, baby. The U.S. Treasury buying back bonds, I think, is a perfect storm for Bitcoin. I think is what Bitcoin was designed to do. The time was designed to thrive in. It's like an unraveling of currency in ways. The Treasury cannot reasonably accomplish what they want to accomplish by buying bonds back, by quantitative easing this way, without getting caught up in a cycle that just demands more and more and more and more from them. They're buying bonds to try to push yields down, and it may work short term, but as soon as those yields start rising back up to whatever level that triggered this, whatever fear they have to buy more. And when that inevitably doesn't keep them down forever, they're going to have to buy more and buy more and buy more. And at some point, they're either just buying more forever at bigger and bigger quantities probably, or they just throw in the towel and say, we can't do this anymore, we're not going to do it. And then I think you get a big crash. I think you pull the rubber band more and more and then it snaps. As long as the U.S. government is buying back its own debt like that, I think that Bitcoin is going to have fuel. And if you look at the timing, so far, that's been true. Like, you can point on this chart when the Treasury said they're going to be buying back them bonds. It was right here. It was Wednesday, August 19th. I'm not a big narrative guy, but that's, I think, the best narrative. I think if we have to point our finger at something, it's the best thing to do right now. Most logical. I also see kind of a contrarian view where stocks are basically at all-time highs. Some of them are. Right? Stocks are at all-time highs. Bitcoin is, if it's not at its low, is close to its low. Time-wise, probably price-wise, close relative. But for the hiking cycle to start, I think that there is a game theory-esque situation where Bitcoin's basically at its bottom and stocks are at its top. Stocks have outperformed Bitcoin over the last year and a half. Everything's outperformed Bitcoin over the last year and a half. And I see a scenario where that inverses and we see Bitcoin going back to outperforming everything else while everything else crashes. I think there are some really interesting outcomes. Bitcoin doesn't go up when the Fed raises rates. I'm not saying Bitcoin will go up because the Fed is raising rates. I guess I'm saying in spite of, maybe that there's stronger factors. I think one of those strong factors is the fact that Bitcoin has been absolutely capitulated. Like, this is total capitulation. I have never in my life seen people so capitulated on Bitcoin. Honestly, like it reminds me of like 2020, and not 2020 in the sense of how kind of urgent and panicky and like the intensity of it, but just the total amount of capitulation drawn out over like a year, honestly more than a year. The last time people were really excited about crypto was at the end of 24. We're at 625 days of like just a little bit higher high, almost all sideways, all down, no hope, no FOMO. People didn't FOMO into Bitcoin in this run. This is the first time ever, I think. Maybe in March of 24 a little bit into alts at the end of 24. alts didn't perform, we didn't get any of that. We didn't get any of this just craziness that we got in 2021, that we got in 2017. None of it. I think that it's much easier to capitulate this chart because there was so much less FOMO. There's so much less like new people convinced, right, to hold forever, to like keep their coins. The fruit on the tree, there's a lot less fruit to shake off. That's the easiest way to put it. Everyone seen the video of that flash flood? Oof, I pray for everybody. Pray for everybody in China, Nepal, anywhere where they're in danger. I hope you guys stay safe. Charts will be here. You don't believe the bottom is in, that's okay. And you've been in every single bear market. That's okay. We don't, I will be honest. Nobody thinks the bottom is in when the bottom's in any of the cycles, really, with very little exception. That doesn't necessarily dictate it was, or that it will now. But I don't know, man. I don't know. I certainly hope it is in. I certainly do not know the future. We're gonna live it out one day at a time. If we trade back below the 200-day moving average, I'll move back to being bearish. Move back to looking for shorts and for looking for that end of the bear market at the end of the year. Let me see if Jackson's Hole Symposium. Is there... Do they not have... Is that it? Like they're not going to stream any of it? They're not... The Fed isn't, at least. It is closed doors. They don't want... Oh, they don't want us getting in on that. Getting in on their secrets. I don't think it is. I think they just streamed. Oh, God, I'm going to sneeze again. I think they just streamed Warsh's speech. It's crazy because there's still like CNBC, this one channel, CNBC TV 18, is just like playing it on loop. Like they still have Warsh speaking. He hasn't spoken in a while. A lot of channels are doing that actually. Just looping and pretending it's live. Catching the suckers. Yeah, I don't see. Do you guys see a feed anywhere of it? If you do, we can watch it. If not, music. Ooh, baby music. I love music. I like music. I like music. Closed my music from earlier. Lose all the monetization. That's fine. Well, Zed's dead. Grizz Wooly Zed's dead. We have been live for a little bit. It is Friday. SpaceX broke structure. Kind of looks like the dollar. Trump live? I didn't see him live. True. Steve knows, man. We've been here. With Bitcoin, you expect the unexpected. Like, the only thing consistently that is easy to predict with Bitcoin is that you'll be on the wrong side of the trade. Bitcoin always tops before people expect it, and it always bottoms before people expect. X poll. 64% bombs not in. Good. Good. Yeah, polls don't... Polls are meh. Polls are meh. They're not like they're a biased sample of things. Oh wow. I wish I was going to Lost Lands. I don't think I am. Petco, too many people are clapping about the Bitcoin bull market. That's a fair assessment. I think nobody truly knows until it plays out. See what Trump says, Sale? Is he even talking? What is he? I'm trumped out 200 there. Every single time we try to cover Trump, it's just Trump. Like, it's either people like complimenting Trump. They're like, Mr. President, I just want to say you did the best and the best, and nobody's. It's like, and it's just like they're just taking turns doing that, and it's just like irrelevant to watch. Or it's Trump doing that to himself, talking about Joe Biden or Obama or the Democrats or something as to why there's problems and how great he's doing. And it's like we don't ever have substance. There's no, like, it isn't about if you believe he's doing a good job or bad job. It's just that's all he's talking about. He's not actually talking about the topic. He's not informing you. It's just like not worth watching typically. He is live on Associated Press. Trump, yeah, I honestly just don't care. I still every once in a while get baited into watching him because it's like gonna be something that seems like relevant. Yeah, all right, Trump is live. Honors Artemis crew. Calls International Space Station from Houston. Yeah, I'm good. That's not even in our realm. Not even in our orbit. This is a beautiful thing, that free speech. Take on Seoul. Well, we had a decent call on the Seoul. I think this is the most likely path for Seoul. Doesn't have to come, but I think a strong potential is that Seoul will look to test previous resistance as support. We called for a move to the 200-week moving average. That's what hit. It hit and closed last night directly there. 200 weeks right there. Like 108, 109, we said. 200-week confirmed. Today we had a little reversal. I wouldn't quite say that rally is done based on this candle. But I can say that if 83 is tested, this is the 200-day moving average as this curls up. That may overlap with 83. We may see some pretty good confluence there for a long. I could take that at 83. Likely could make an argument down here at 95 as well. I think that 83 is the play. Drop it like it's hot. God, I want to see Grizz so bad. I wish to Grizz. I wish to Grizz. Grizz isn't playing at Lost Lands anyway, so I ain't too worried. Things get pretty juicy for Solana above this 200-week moving average. They get very nice. Probably 125 is your immediate next stop. .5 retrace. Support April, May 25. It's like 125 and then 210. Feeling pretty good about DCing under 100. That's, man, you've been doing good so far. It's good now. Make a plan. It's like hardly a bear market. 79%, hardly a bear market for crypto. In a normal bear market, we would have seen Solana come down to like here. Might be off the table. This is the big pivot though. This is where shit's hitting the fan. Gets serious. Check out these VWAPs for a sec. Ooh. Kind of like this too. 146. All-time high VWAP. 618 retrace. If Sol breaks the 200-week moving average here at 108 and retakes it, like Bitcoin is done with the 200-day, I think you see 146. Maybe you see this. Zigzag, I'm not sure what you're referring to. The one day Bitcoin looks, every sign of dumping, the Fed suddenly pumps the entire market with billions in liquidity? What are you referring to? Because the Fed has not been doing quantitative easing. The U.S. Treasury started pumping markets with money. Pick the hell of it is. Stop sniffing glue. Who's sniffing glue? Getting back on the glue train. NVIDIA ring shows in 3 months everything crashes. I can see that. You're back. What's up, Side GG? What's up, Alexandra? I missed you. Good to see you. Happy Friday, my friends. Faith Unlocked, how are you? Link Marines. Oh yeah, it's been a good day. We had a good show. We had Chairman Warsh out here. It's Friday. Soul shirt from 109. Where do you TP? Jeez. I can't give you financial advice. But if I were to take a short from 109, which is a beautiful short, well done. Like TPF at 95, move the stop up. Then I would set the rest of the TP at 83. That's how I'd play it. Please give financial advice. Please, for my familia. Apparently, I don't know, like, I don't give financial advice. But when I started, I thought that, like, you would go to jail if you gave financial advice. And then I went on the last, like, 7 years to just see, like, all these people flat out giving financial advice and nobody gets in trouble. Crime is legal, but no, I'm not going to tell people what to do with their money. Everybody's got to make their own choices. Their profits are their own, and their losses are their own, you know? Like, I can't be responsible for either. What up, Rockstar Cola? You know, Rockstar Cola, if that's named after Rockstar's energy drink, they had a cola energy drink briefly. That was a banging energy drink. If it's not... Oh, wait, Rockstar... Wait, Rockstar is the energy drink. And they had a cola flavor, but it's not... Yeah, I don't know. I don't know. Brain fart. I think Bitcoin looks good here. Oh yeah, Wednesday's stream. Wednesday's live trade. Where are we? Here we go. Wednesday's live stream trade. I didn't even update you guys. You guys saw this playing out on Wednesday. Money. Money, money, money. Locked and loaded. Well done. Name of this mix, Side GG. This is Grizz. The artist is Grizz. And the track is Side Quest Volume 1. It's one of my favorite mixes. It's about an hour long. It's really good. Hella good. Thomas, top 3 best financial advisor of all time. Well, thank you. Thank you. But don't tell the government that. Or do. I don't know. The government doesn't seem to care anymore. It's Friday. That was your number 1 store. Rochester store was fire. It was fire. Why'd they get rid of it? It's just me and you, bro. Nobody else knows what we're talking about. It's just me and you. Have you heard of Dat Stick? No. Old school dubstep. I mean, I love dubstep. I love rhythm. I'm supposed to go to Lost Lands this year. Actually, in like 2 weeks, I was supposed to go. But my friends bailed, and they had like the hotel arrangements. So probably not going unless a miracle happens. Still have my ticket. So it's not a 0% chance I'll go. Wow. September's interest rate hike just keeps going up. It was 34% yesterday. It was 50% after speech. Now it's 52%. Called it again. called it again. 𝐒𝐈𝐆𝐍. Sign Ryan, my guy. What's good? What's up, Bounty? What's up, 19? Thoughts on MSTR? Sure. This will be the last one. Can we talk about GTA 6? Damn. I was looking for a short on MSTR. To be fair, that was all the way back in July. Things were looking very different. Not stopped out yet, but my lord, might as well be. MSTR still in the downtrend, unfortunately. Money flow rolling over on the day, actually looking pretty good. Swerving. Suburban. Call me Captain Kurt. I'm Mervin. It's such a good mix. 200-day moving average hanging out here under the descending high trend. It's a great rally. It's nowhere near out of the woods yet. 200-week moving average, 160. We are seeing an imminent death cross on the week. Interesting, at 160. Price is looking to tag it. I could see MSTR at 160. The last weekly death cross MSTR had was essentially the bottom of the bear market, November 22. Bitcoin had bottomed, yet MSTR moved down one more time. Time before that, 2017, traded sideways for 2 years. I don't think that's the likely outcome now. I think we could see this 160. Bro. What's the ticker for GTA 6? I'm long on GTA 6. This shit's noise. Sorry you feel that way, brother. I love this. To each their own, you know? There's a lot of good music out there. Of all different varieties and types. It's just whatever floats your boat, you know? Yep. Alright, this is the perfect time. I appreciate you guys tuning in. Jump in the Discord, discord.gg/TomCrown. Sign up with our partners, BYDFi and Femex. In the video description below, you'll also find links to them and others in the Discord. And if you sign up with any of my affiliate links for exchanges, you will get very exclusive VIP roles in that Discord, discord.gg/TomCrown. We'll be back on Monday at the latest. I appreciate you tuning in. We had thousands, tens of thousands maybe of live viewers today. You guys are the GOATs. I'll catch you on Monday. Crown out.